All right, well, let's take us through the week of trade. On nabtrade, we're joined by Gemma Dale. Gemma, good to see you.
Lovely to be here.
Yeah, what a great time to be alive. It's like this week. I don't know about you, my head is still spinning with the amount of news that we've had. So how are investors taking this week? Well, let's start with the volumes. How are they looking at the moment?
Everyone's pretty calm. There's been a lot going on. It's easy to get focused on the US election, but we've obviously had the RBA rate cut as well, which is very significant for Australian investors. Everyone's pretty calm. We've seen very steady trading patterns through the week. We didn't see massive volumes of people going, oh my God, this is just wild. So it's been pretty steady, and it's mostly been quite tactical. Where people are seeing opportunities, they'll move in. Where they think things have gone too hard, they'll just get out a little bit to the sidelines. So we're mostly seeing portfolio shifts. We saw most of our activity back in March and April when people saw these incredible buying opportunities. Unless we see that again, the market falling away heavily, I don't anticipate a lot of our investors getting carried away at the moment. They're just watching. They're quite happy.
Gemma, if you're a bank that had to announce that 2/3 fall in profits, you'd probably choose this week, wouldn't you? As a few of them coincidentally or luckily or strategically did. What did nabtrade clients do on the back of the bank results that have come out in the last 10 days or so?
Yeah, so financials are absolutely our most widely held sector. So that everyone's got banks in their portfolios. A very, very small proportion of investors who don't hold them. So when we see movements in the banks or we see any announcements, we see a lot of activity. We've seen a shift down in the proportion of people holding banks and also the proportion they hold in their portfolios over the last 5 years. It's taken a while, but we've seen this real shift down. So anything that will move the price will move activity in our base. So NAB was seen as a bit of a profit-taking opportunity primarily. A lot of our investors felt that the little bounce they got yesterday was enough. A lot of them were buying it when it was down at its lows earlier this year, so it was our most bought stock at various periods during the falls. So we saw a lot of profit-taking yesterday, really, really big shift. Westpac, on the other hand, was a buy. So we saw investors going, do you know what, they've been hit a little bit harder, I will take a little bit more of that on. That may be because Westpac is much less held in our book than NAB though, so it's always interesting to see. Some of it is portfolio shifting and it's mostly trimming at the edges. We don't see people selling down whole portfolio chunks. We don't see them selling down a whole position, and we also don't see people taking a position for the first time. It's pretty much at the margin in the banks, and CBA is not even in there. They're not interested at the moment because there's no news.
All right, now we're talking about volumes now. I gather with CSL, obviously the largest stock on the index there, the volumes have been massive.
Yeah, so CSL is fascinating to me. What's most fascinating is it's a very high conviction stock and actually not very widely held. So we've got a handful of investors who love it to pieces and have very, very, very large holdings. And then we have a long tail of people who don't hold it at all.
And why is that? Has that changed at all in the course of the pandemic?
So the pandemic has brought more people to CSL, and it's worth noting that anyone who holds the index, and we have plenty of investors who do, they've obviously got CSL by definition. But in terms of holding it as an individual stock, I think partly it was a growth stock for a long time, and we have a lot of retiree investors who want yield. They're not interested in a stock that is not going to provide them with that consistent dividend and has low levels of franking. That's hurt them badly in many cases. So we did see quite a few investors come to it and go, oh, finally, look, I have to hold this now. What's been really interesting is where they trade it. So I've been telling you guys, they'll buy it in the 270s, they'll sell it in the 280s while it's been trading in this range. $299, over a 90% sell. So everyone was like, do you know what, $300 is my magic number. I will trim now, but I can absolutely guarantee you if it comes off, they'll be getting back in again. So once we get back below the 290 mark, assuming we do, they will be jumping back in again. It's these large trade sizes. So the other thing is the trade sizes are massive. Trade sizes over $60,000. If you looked at something like a zip, they're under 10 to give you an idea of the magnitude of how much moves in it.
It's funny how those psychological numbers work though, isn't it?
Yeah.
300 sounds really big. Gem, a week of shifting narratives on the stock market. This will be bad for the market if this president and this Congress sets up. It kept on changing. How did people play that? I imagine that BBOZ was an instrument that was used quite heavily.
Yeah, so BBOZ has been kind of the story of the year. It's fascinating. A lot of our investors would never have taken a short position or had any idea how to protect the downside. Options are sort of an instrument that's available to everybody, but you need to certainly take out extra kind of protection. If you're going down that path, you need to sign agreements, you need to ensure that you have an acute understanding of how those things work. Most of our investors won't go there, but BBOZ has made it easy for them to have a view about where the market is going and get some downside protection if that's what they want. And we've seen a handful of very wealthy investors use it very actively, very, very actively. And we've also seen a wide range of other investors take positions.
Okay.
It's been moving this week. Probably the most important thing is it's been moving a lot. So it's been in our top 3 trades several days this week,
Incredible.
which is very unusual for an instrument of that type. Very, very large trade sizes. And it has been shifting depending on sentiment, right? So one day they'll be getting some downside protection. Next day they'll just be going, I don't need it today.
All right. I did want to ask you about Treasury Wine Estates, because obviously there's a lot of news on the horizon at the moment, particularly as far as wine exports to China. What's going on there? That's hurt them badly. How have investors taken that? What have they been doing?
So our investors are naturally quite contrarian, and I assume they also like wine. So they saw it as a massive buying opportunity. Yesterday was a huge buy in
Two
Treasury
worlds
wine.
collide.
Yeah, I was looking at the numbers that you put up earlier. So they've done very well. They've had a good day today.
Yeah.
They were buying hand over fist yesterday. So I think they feel that this is sort of short-term news, that the long-term trend for wine consumption in China will be positive, and then even though there's obviously some jawboning and also some regulation that will be negative in the short term, hopefully things will settle down and those volumes will get back up again. Hopeful.
All right, Gemma.
So much to keep our eye on. Gemma Dale from nabtrade, thank you as always.
Thanks so much, guys.